Imagine waking up tomorrow morning and seeing headlines that billions of dollars have vanished from the stock market overnight. Not because of a war, not because of a recession, but because investors suddenly realized they were chasing a dream powered by artificial intelligence. Right now, AI companies are attracting record amounts of money. Their stock prices continue to rise, and millions of investors believe they're witnessing the beginning of the next technological revolution. But here's the question: are we investing in the future, or are we watching the next financial bubble form in real time? Before we continue, I want to hear your opinion. Do you think artificial intelligence will create the next generation of wealth, or the next big stock market bubble? Let me know in the comments below. And if you enjoy finance documentaries that break down complex topics in a simple way, consider subscribing. It really helps the channel grow. Let's begin. Every generation experiences a technology that changes the world. For some, it was electricity. For others, it was the internet. Today, that technology is artificial intelligence. AI is already helping doctors analyze medical data. Businesses are using it to improve productivity. Banks are using it to detect fraud. And investors are pouring billions of dollars into companies connected to AI. The excitement is real. The technology is real. But history teaches us something important. When excitement grows faster than reality, problems often follow. To understand what's happening today, we first need to understand what a stock market bubble actually is. A bubble happens when people become more focused on rising prices than actual business performance. Instead of asking, how much money is this company making? They begin asking, how high can the stock go? That's when emotions start replacing logic. People become afraid of missing out. Friends talk about easy money. Social media becomes filled with success stories, and suddenly everyone wants in. More buyers push prices higher. Higher prices attract more attention. More attention attracts even more buyers. And the cycle continues until reality eventually catches up. We've seen this before. In the late 1990s, investors became obsessed with internet companies. Many believed every internet business would become successful. Stock prices exploded. Millions of people rushed into the market. But when expectations became too unrealistic, the bubble eventually burst. Many companies disappeared. Investors lost billions. The internet changed the world, but not every internet stock became a winner. That's an important lesson. A great technology doesn't automatically mean every company connected to it is a great investment. And that's exactly why some experts are becoming cautious about AI stocks today. To understand today's AI boom, we need to travel back in time. The year was 1999. The internet was changing the world. Investors believed every company connected to the internet would become successful. Money flooded into the market. Stock prices exploded. People quit jobs to trade stocks full-time. Some investors became millionaires almost overnight. It felt like a new era had arrived, and in many ways, it had. The internet truly changed the world. But there was one problem. Reality couldn't keep up with expectations. Many companies had exciting ideas, but very little revenue. Some businesses weren't making profits at all, yet investors kept buying. Eventually, the bubble burst. Trillions of dollars disappeared. Many companies vanished forever. But something interesting happened. The internet survived. In fact, it became even more important. The lesson is simple. A revolutionary technology can be real, and a dangerous investment bubble can exist at the same time. Both things can be true. That's why some investors see similarities between the internet boom and today's AI revolution. Now let's look at why investors are so excited. The answer is simple. Potential. Artificial intelligence could transform healthcare, transportation, education, finance, manufacturing, and countless other industries. Businesses see opportunities to reduce costs and increase efficiency. Investors see future profits, and when investors see future profits, money starts flowing into the market. The problem begins when expectations become unrealistic. Sometimes investors start pricing in years of future success before those results actually happen. In simple terms, people start paying tomorrow's prices today, and that creates risk. Because even great companies can disappoint investors if expectations become too high. When excitement enters the market, investors often make the same mistakes. The first mistake is chasing headlines. People see a stock making news every day and assume it must be a good investment. The second mistake is buying because everyone else is buying. This creates herd behavior. Instead of making independent decisions, investors simply follow the crowd. The third mistake is ignoring risk. During bull markets, risk often feels invisible. People believe prices will continue rising forever. History shows otherwise. Markets move in cycles. Nothing goes up forever, and nothing stays down forever. Successful investors understand this. They focus on long-term goals instead of short-term excitement. So how can ordinary investors avoid falling into the trap? The first step is simple. Control your emotions. Never buy a stock simply because everyone else is buying it. Never invest because of fear of missing out, and never assume that a rising stock price guarantees future success. Instead, ask important questions. How does the company make money? Is revenue growing? Are profits increasing? Does the company have a strong competitive advantage? These questions help separate smart investing from pure speculation. The second step is diversification. Putting all your money into one company or one trend creates unnecessary risk. No one can predict the future perfectly. Diversification helps protect investors when unexpected events occur. The goal is not to get rich overnight. The goal is to build wealth over time. The question isn't whether AI will change the future. The question is whether investors will remain rational while it happens. So what do you think? Are AI stocks creating the next generation of wealth? Or are we watching another financial bubble form before our eyes? Share your thoughts in the comments below. If you found this documentary valuable, leave a like and subscribe for more videos about money, investing, and the future of the economy. Thanks for watching, and I'll see you in the next one.